This is the Southside School of Financial Freedom watch list and market report for the week ending April 22nd, 2023. Our question this week is, what are dark pools? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average increased 0.07% on Friday, but was down minus 0.23% for the week. The S&P 500 increased 0.09% on Friday, but was down minus 0.10% for the week. The Nasdaq increased 0.11% on Friday, but was down minus 0.42% for the week. Looking at the week, we can see that there were 8 up finishes versus 7 down finishes for the major indexes. On Monday, all the major indexes finished up. On Tuesday, the Dow Jones Industrial Average and the Nasdaq finished down, while the S&P 500 finished up. On Wednesday, the Dow Jones Industrial Average and the S&P 500 finished down, while it was the Nasdaq that finished up. On Thursday, all the major indexes finished down, and on Friday, they all finished up. New unemployment claims were 245,000. Home sales fell in March. The 30-year fixed mortgage rate rose to 6.39%. Home buyer mortgage demand dropped 10% last week. U.S. Treasury yields inched higher on Friday, and U.S. business activity rose to an 11th month high in April. New unemployment claims, home sales falling, mortgage rates rising, mortgage demand dropping, U.S. Treasury yields inching higher, and U.S. business activity rising to an 11th month high are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are dark pools? Dark pools are private stock exchanges or hubs for trading stocks and other financial securities that are not accessible to the investing public. They exist to facilitate trading large blocks of stocks by institutional investors who do not want to impact market prices with their large orders. Dark pools allow private trading between large institutional investors like hedge funds and investment banks. Because the trading is not in the public domain, front running and price devaluation are largely avoided. Dark pools are thought to increase market efficiency and add liquidity. Because dark pools are done privately, they lack transparency. There is little oversight. The general public does not know that these pools exist, so the public may be disadvantaged by dark pools. Price discovery is more difficult to determine. Large shares changing hands privately does not reveal true supply and demand of a stock or security. How do you imagine Warren Buffett's Berkshire Hathaway buy large blocks of shares? Does he use dark pools? Where are your stocks traded? Are they traded in dark pools? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you're going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn, however, to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside Strategy. You can learn more about the Southside Trading Strategy at Southside School of Financial Freedom.com. Here is the Southside Trading Watch List from the week ending April 22nd, 2023. The strongest performer on the list this week was Teladoc Health Incorporated, ticker symbol TDOC. It's in the first column. It increased 1.02% on Friday and was up 8.6% for the week. Teladoc Health Incorporated provides a portfolio of healthcare services and solutions through virtual access. The services include various medical subspecialties from non-urgent episodic needs such as flu and upper respiratory infections to chronic complicated medical conditions such as hypertension, cancer, and congestive heart failure. Looking at a summary of results, you can see that Teladoc has increased 17.51% year to date. I did not trade or generate cash flow from Teladoc this week. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 16.26% versus 7.78% up for SPY, a difference of 8.48%. The Southside is beating SPY by almost 8.5%. The cash flow generated by the Southside cash flow system for this week was 4.87% of the portfolio account value. The account value changed by minus 15.86%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.06%. Bitcoin watch. Bitcoin lost 10.16% this past week and still appears to be on the verge of a bull market. Though it is down more than 60% from its all-time high, which was achieved in November 2021, it is up more than 65% year to date. I sold option contract on one position this week. It was a put that ranged from $0.00 to $129.34. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of Financial Freedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists levels 1, 2, and 3. They are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.